And much better than the first quarter when we had a contraction of 0.6%. Doug Flynn's here on this, Flynn Zito Capital Management. All right, Doug, what do you make of this revision? So it's not, forget the stock market reaction or lack thereof, but the idea that is the economic concerns people have, like, oh, maybe we're slowing down or going into a recession, are they overblown?
Well, GDP is proof that you can have growth even if you don't have your growth in your wallet. Like the economy can grow even if your wallet doesn't, so to speak.
Right.
And this is a revision of that. And the way this is the second quarter that we're talking about. And the way it works is they come out with the preliminary one in the first month after that quarter. And then they have a first revision. And now this is the second revision of the second quarter, which is really like the third and final time they're going to talk about this. But that bump up is just that they really drastically underestimated the consumer spending part. I think they got it right on the fact that, you know, previous quarter we had a lot of people buying imports, which drove down our GDP into negative territory.
Right.
And so without that, this is that same second quarter where now you don't have all those imports, which drove up the domestic part of the GDP. And so, but the consumer spending went up a lot, and so that was way off, and that's why you see this big spike in the GDP number for Q2. So you have to average them together to get the full number for the year.
Yeah, it's interesting that the consumer's holding up in terms of how much they're willing to spend still. Okay, so that's definitely part of it. To your earlier point, like at the beginning of the year, everybody was so afraid of the tariffs that are running businesses and even consumers to some extent, they're trying to get ahead of everything. So that distorts the figures. What I said at the top of the show today is it's funny, this comes out in the same day that a huge American company in Starbucks announces job cuts. I mean, it's hundreds of jobs, not thousands, but still. And corporate jobs, not in the stores necessarily. 1% of North American stores, however, will be closing, says Starbucks. So that's kind of the wider thing we've been talking about is like, all right, job market. It's been this no hire, no fire job market. But now maybe do you see some companies that are instituting layoffs? What do you think?
Yeah, well, this is twofold, really. This is Starbucks itself, which has had 6 straight quarters of downward sales, and they have a new CEO from a year ago, and they actually announced layoffs in February of 1,100 people, all on the corporate side. They're trying to, put more money into the stores, make the customer experience better. They need to turn that around, and so they're going to spend money to try to cut this from happening and then turn it to a profit. But it does speak to the bigger issue that, layoffs, consolidations, and just basically firms that have open positions that they're not filling is something that you're absolutely seeing across corporate America. And that's the beginning. Even if they're not doing massive layoffs across the board, you're starting to see it show up in these areas. And that's the problem with the labor market and why there's concerns, because eventually there's only so much of this that you're going to do before you turn to the regular folk, and then they start to lose their jobs. And that's where it gets a little more concerning. So with the Fed thinking about lowering interest rates, you have a hotter GDP number, which you don't want, and then you have a weaker jobs number, which you do want if you want lower interest rates. So we'll see how this actually plays out in next quarter. That's going to be the key. Where do those GDP numbers show up as well as the job numbers?
Thank you, Doug. As always, Doug Flynn, to Doug's point, good news for